What's up guys, hope everyone is doing well. In this video I'm going to be going over some very startling findings with respect to the stock markets, but first off I'm just going to briefly touch on Bitcoin to give the idea alongside with that in terms of the decoupling and how it relates to the markets right now. So as I went over my video yesterday, we had this macro M pattern, this harmonic M pattern towards the downside, assuming we're at our bottom right here with 17.5 thousand, assuming these bullish divergences right here with respect to this smaller W along this pink arrow is going to indicate that we have bottom and we're going to eventually reverse towards the upside, and we will begin this upcoming bull market that would likely take us up towards approximately $242,000 into the second half towards the end of next year. General range around $150,000 to $300,000 at the highest, just to encompass for all possibility to be prepared as a trader. But outside of that, just as a synopsis as to where Bitcoin kind of is generally lying right now. Here for the New York Stock Exchange, which I suppose I'll go over this one first as it's a little bit more clear. But essentially you're going to see here a pattern like clockwork every 7 years starting from around 1994 with respect to these two M patterns you see on here. So you can see 0, 1, 2, 3, 4. For the M patterns, 1 we hit a high, 2 we hit a low, 3 high, 4 another low. You'll see for this one we enter 1999, 2000, 2001. Come up to our 3 for our next peak. We have 2000, you see going in 2006, 2007, 2008. So we have pretty much 7 years from 1 to 3. Now let's go from 3 to the next one. So again, we're at 7. Right here we have 2014. So 13, 14, and 15. We have 0, 7, 14. So every 7 years. Go to our next peak at 3. Right here we're at 2021 and 2022. So we have 0, 7, 14, and 21. So every single 7 years we enter a downside for the New York Stock Exchange, and we just so happen to be lucky enough to be lining up with our a 2008 crash, so the worst crash that we've seen ever since these patterns began, which, you know, it makes a lot of sense. A lot of people have already been talking about how the markets are going to crash. Obviously, I'm sure a lot of you are aware the world is in a terrible place right now in just about every category you could think about it. I would argue to say that we are probably, although we are more advanced than past civilizations and past groups of peoples, we are probably at the worst / entering the worst time period of human history, sadly and unfortunately. But odds are we're going to enter this crash. It's worked like clockwork every 7 years. This is something that's definitely highly manipulated, more than I would say Bitcoin is, in my personal opinion. So I do think we'll see this continue to crash pretty hardcore. And something that's also very interesting, which I believe I'll have to go down to the weekly to show this, but if you actually, no, it's not on here, so we'll just stay on the monthly. So what you can see right here is, you see how once we hit this first 3, we had this minor drop and then a minor blip toward the upside, and then we pretty much jumped off Mount Everest towards the downside. That's pretty much what's happening right here. We saw this downside, we see a blip, and now we are beginning what I believe is the first 2 candles of this jump off of Mount Everest towards rock bottom. I think worst case scenario, we just come down and hit this 618 with respect to this entire retracement, going back to the beginning of this first M to the highest high we've currently set, which takes us down to around 8,200. Also lines up with the lows that we've wicked to each time ever since we got towards around halfway through this current second M pattern. But going back to this other chart again, you'll see the same M patterns along with these blue paths. You'll see our second blue path for the M pattern right here. I also broke down these bullish instances for this second M pattern into these these smaller, more micro M patterns that then reverse into these bullish W's to have this final relief upheaval and these 2 bullish instances of this M pattern towards these all-time highs. But here for these Fibonacci retracements, you can see, so for this one right here, these 2 right here, so this one to the right most and this one right here, these are pretty much the exact same retracement that is reversed. You can see we're coming down to the golden pocket, 618 and 382 for both of these. Whenever you reverse them, you realize that the 618 and 382 are pretty much the same retracement when reversed. If we go to this one right here, that lines up with so our 2 to our first 3. That also lines up with pretty much coming down to the golden pocket, 618 for this current drop, similar to our 2008 crash. And if we go to this one right here, taken from the beginning of this first M pattern to the first high of this M pattern that we set, that lines up with us currently coming down and crashing down to the 1.0618, or just in general to the very first peak we set of this first M pattern. But also we could see this is kind of forming, if this does end up falling through, which I think it will. It's kind of startlingly accurate and precise, the fact that it's working every 7 years. But this is looking like a megafold, so once we do have this very bad correction, we'll either, after this correction, we'll see the third M pattern pretty much start, so we'll start to see a slow and gradual increase similar to these bullish instances that we've seen for these other M patterns, or we will continue to eat rock bottom and the traditionalized fiat markets will like fully die off as we enter blockchain and then the alternatives that it's going to eventually bring. But here we see the SPX. I went over this in my video yesterday, so I'm just going to briefly touch on this. We're seeing another M pattern, macro M pattern, started in 1996, ended in 2009 after the 2008 crash. We have hit the price target of that around 11, 12 years later. Beginning of this year, late last year, we hit that price target. And again, right now we should just be entering a similar crash. This one also looks very startlingly. I don't know if I actually went over that. I did go over that with that one. Okay. So for this one again, you'll just see kind of a similar instance. We see our first minor drop. We see a blip towards the upside, and then we're probably going to jump off Mount Everest. We're seeing that similar instance right here. We're seeing just a short downside, a minor blip, and now I believe we're seeing the first two candles of what is a very brutal drop about to come. It also lines up with going down to the 1.68 of this entire macro retracement from this X, so the bottom of this M, all the way up to the current high that we've set. So here for the Nasdaq, this one looks the most different out of all of them. This one more accurately follows within this very nice Pythagorean triangle formation. It's probably closest to around 137 degrees up here if I had to guess, and around 21 degrees on the two left and right angles. But anyways, the price target for this one lines up again with this range we've already hit. We hit it again, similar to all the other ones, the indices late last year, early this year, 2022. We will see. So for this one, the crash for 2008 wasn't as bad as the first one like the other ones were. It's kind of just looking similar to our 2008 crash. It's like I said, it's kind of like we are in 2008, but we're in 2022 because of how bad everything's looking. So we're kind of just seeing an initial blip, or initial downside, then we see a small blip towards the upside, and then I believe we're about to see a pretty strong jump towards the downside. This one could likely end up, like I said, I do have a over here on the weekly, go to the weekly to see this ABCD pattern. This one's very symmetrical, very nice, almost perfectly symmetrical looking to the eye at least. This could end up putting us down to around 9,000. This one seems to be, at least according to its history and how this chart looks, this one appears that it might bottom out a little bit earlier than SPX and the New York Stock Exchange. Both of these, the SPX and the New York Stock Exchange, seem to be bottoming out more towards the second half of next year, closer towards the end of next year, kind of in line with when Bitcoin tops out next year. But this one kind of might end up topping out more towards the first half of next year, around March, April, June. Or did I say March? Yeah, March. Yeah, I'm getting confused. March, April, May, June. If not, then let's say if it actually extends later on in time, and if it extends more to the downside, it's possible we could come down as low as this moving average around 6,500. Like I said, more towards the second half, more towards the end of it next year, around November, like September, October, November of next year. But just in general, things aren't looking good. Obviously, I'm sure you can probably tell this is definitely seeming to work like clockwork. Here for the DXY, which I went over this yesterday as well, we're seeing a triple bearish divergence. We saw a hidden bullish divergence in between the first and the third bearish divergence to continue into this triple bearish divergence. But again, similar to the other stock indices, this is looking just as bad. It looks like we have entered pretty much our all-time highs. We're very extended, pretty much overheating on the RSIs, the technicals down here, the indicators. Odds are we're probably going to see a crash, I believe, probably in towards the end of this decade, 2032, coming back down to this descending average baseline, and it's hit every single time for its bottoms. This will just line up in general with DXY will bottom out right here as Bitcoin's topping out towards the end of this decade, following through with the inverse correlation that Bitcoin holds with the DXY. But again, that was about all I really wanted to touch on in this video. I just wanted to let you guys know that this is probably going to crash pretty hard. I typically don't say something is going to happen. I typically just say that it's either going to go up or down because, I mean, I'm not in the game of trying to tell people what to do, but this is not looking good at all. It's looking very bad. But it's most likely a good thing for Bitcoin because, like I said, decoupling and whatnot, odds are we'll probably see Bitcoin go up from here, and we'll see the traditionalized fiat markets and the indices go down for some amount of time. But that's about all that I wanted to go over in this video. Hopefully you guys enjoyed, and I hope you all have a blessed day.